Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden meanings behind corporate announcements, and today we're diving into Stereotaxis' latest filing, and let me tell you, they're cooking up something interesting in the market. This report is all about a significant agreement Stereotaxis has inked, and it's a big deal for how they'll fund their future growth. So what's the core story here? Well, on August 29, 2025, Stereotaxis, or the company as they call it in the filing, entered into a sales agreement with Roth Capital Partners LLC. Think of Roth Capital as a financial matchmaker helping companies sell their stock. This agreement allows Stereotaxis to sell up to a whopping $50 million worth of their common stock. Now, why raise this money? The company states it's for working capital, getting their research and development projects moving forward, and for general corporate stuff. They specifically mentioned accelerating the commercialization of their innovation pipeline, which means getting their new ideas and products out to customers faster. This is essentially a way for Stereotaxis to tap into the public market for funds as they need them. It's like having a credit line for stock sales, but instead of borrowing money, they're selling pieces of the company. Now, how they do this is pretty smart. They're using a pre-approved plan called a shelf registration statement. This means they've already told the SEC they might sell more stock, and this agreement activates that plan. They filed a prospectus supplement that details this specific stock sale plan. It's all part of a larger $100 million offering they had in the works. The sales can happen in a few ways. Roth Capital can act as a sales agent, basically finding buyers, or they can buy the stock themselves as a principal. The key phrase here is at the market offering. This means they can gradually sell shares on the stock exchange, kind of like a drip at prevailing market prices. This is less disruptive than a big one-time sell-off. Roth Capital has to try its best, using normal selling practices, to sell these shares based on Stereotaxis' instructions. This includes when to sell, how many to sell in a day, and making sure they don't sell for less than an agreed upon minimum price. They're not obligated to buy shares on their own unless they agree to a separate deal. Now, about the cost of this arrangement, Roth Capital gets paid a fee, and that fee can be up to 3% of whatever they sell. On top of that, Stereotaxis will cover Roth Capital's legal costs up to $50,000 and some other expenses. It's important to note that Stereotaxis doesn't have to sell any shares if they don't want to. It all depends on how the market is doing and if the company actually needs the cash. The deal will end when they sell the agreed upon amount, or if either side decides to end it. This is the basic outline of the agreement. The filing points out that this summary isn't the whole story, and the full detailed sales agreement is available as an exhibit, meaning you can go read the nitty-gritty if you're really curious, to make sure everything is on the up and up legally. They've got a legal opinion from a law firm called Bryan Cave Leighton Paisner LLT. Their stamp of approval confirms that the sale of these shares is done according to the law. The filing also lists all the exhibits attached. The most important one for this announcement is Exhibit 1.1, the sales agreement itself. And finally, the report is signed off by Kim Peary, who holds the title of Chief Financial Officer. This is standard practice, showing that the company's finance chief is aware of and responsible for this filing. Now, let's talk about what this all means. Stereotaxis is essentially setting itself up to raise a significant amount of capital, up to $50 million. This is a strategic move to fuel their growth, particularly in bringing new products to market. Raising money through at-the-market offerings like this is common for companies that expect to grow and need flexible access to cash. It allows them to capitalize on favorable market conditions without taking on debt. However, it also means that existing shareholders might see their ownership percentage diluted if new shares are issued and sold. This is a trade-off that many growing companies make. Dilution means each existing share represents a smaller piece of the company. The success of this plan will heavily depend on Stereotaxis' ability to execute its innovation pipeline and generate revenue from these new products. If the company performs well, the dilution from selling shares might be a small price to pay for the growth achieved with the new capital. If the company stumbles, the dilution could be a more painful consequence for shareholders. The fact that they are using a shelf registration and at-the-market offering suggests a degree of maturity and a well-thought-out financial strategy. It indicates they are proactive in managing their capital needs rather than waiting for a crisis. In terms of potential risks, the market's perception of Stereotaxis and its future prospects will be critical. If investors are confident in the company's strategy and innovation, the stock price will likely remain stable or increase, making the offering successful. If investor sentiment turns negative, the company might struggle to sell shares at favorable prices, or at all. Overall, this filing signals a bold move by Stereotaxis to secure funding for growth. It demonstrates a commitment to innovation and market expansion. While the exact impact on shareholders will depend on market conditions and the company's performance, this agreement puts them in a stronger position to pursue their ambitious goals. Alright, that's our breakdown of Stereotaxis' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.